So let's talk about your layout, your charts. Like, where did you get to this point where you have this layout that we're looking at right now?
Yeah, so I started out as a price action trader. I guess you could say I started out as searching for the Holy Grail indicator. That's, I think, where most of us start out. And then I said, all right, naked price action. I really studied a lot from a guy named Lance Beggs. I learned a lot from him about price action trading and did that for a while. And then just through trading forums and communities and all these kind of things, started to see people using profiling tools and whatnot. I was like, I got to kind of check that out. And then from there, started studying actual order flow. Therefore, that's why I have the cumulative delta here, which people think cumulative delta is something super fancy. It's literally a chart representation of the time and sales window. That's what it is, right? So it's the ticker tape in visual form rather than trying to be like PAX and remember every number that streams by you. I'll trade NASDAQ all day. And then I'll go to an after hour event or something, and someone will be like, oh, yeah, you trade NASDAQ. What's it trading at? I don't know. I don't even know the numbers. So anyways, a layout like this is nice and simple. It might look complex to some, but I've got essentially two higher time frame contextual charts here. This is VWAP and one standard deviation and two standard deviations from the weekly VWAP. Right. So I get a good sense of where are we trading right now relative to where we were last week. Right. And where was that kind of value that built for last week? Where are we trading as this week's value develops in real time? So that's 2 points of context for me. Last week's value area and the developing current week's value. And then the bottom right panel here, it's just daily profiles, pit session only. Where are we trading today relative to that? And I thought the most pressing thing about today's market coming into the open was this distribution, right? Farm had talked about it. It's important. Where are we hanging out and staying relative to that? If we start to accept back into this lower area, we could go for shorts. You saw me, other than a stop run scalp short, I took all longs today. It's because we are holding that distribution. And so I drew that distribution as we get to the left-hand chart here, and I'm aware of what's going on buying and selling and on the tape. And I have that same VWAP-based framework on my intraday chart, just like we have for the weekly. And I tend to lean on that pretty heavily for trade location.
So on the profile, you're doing regular trading hours, right? Who cares what
It,
happens in Europe and all that
it
stuff, right?
depends on the market. Markets like currencies, where the volume's a bit more split between what's going on. For the euro, I think what matters in Europe matters. So I'll you do a 24-hour full Globex profile for those. For US indices, I find that the pit session is, I know there's a lot of trade that occurs overnight these days, but pit session still rules.
Yeah, no, I hear you. And I kind of look at both, but the order flow part comes from there's an order flow suite of tools on NinjaTrader. That's why it has that order flow. You were mentioning it
Yep.
earlier. And so when I'm looking at your VWAP, I was not a VWAP person until I met Credali and then Brian Shannon. But tell us about the standard deviation bands. You use two or three?
Oh, there's two above and two below.
Okay.
The plus and minus one, and the plus and minus two. So that would be plus one here, minus one here, plus two here, minus two there. And the red line is the actual volume weighted average price, VWAP. And so it's really just a measure of how far is price able to get at any point in time away from VWAP. And so there's no secret sauce to it, but the concept of energy. It takes energy to move a market directionally. So the further and further you get away from VWAP, the more that energy is potentially spent, exhausted, those type things. And so for me, it's two things. It's a way to gauge how much energy might be required for continuation. But markets can trend as well. And when they trend as a general loose framework, which is what this is for me, they tend to kind of not spend too much time holding back inside the zone between that plus and minus one. They tend to hold outside of it. And so if they're doing that and all this other contextual work we'll do with the other charts tells me that I like that direction, then I'm going to go with that trend. If context like today tells me, hey, I know we're poking below some of these bands, but we want to be fading that move back towards VWAP, that's what I'm going to do, right? So it's having a higher time frame awareness and then using the shorter term tools all the way down to the order flow to help fine tune that and to pick good spots and manage risk.
So in that last trade, you went long, the market was going your way. And I've seen a lot of traders say like, all right, if it gets to VWAP, VWAP might act as resistance, so I want to get out there. But
That's
you
right.
didn't do that. You recognized we were going to keep rolling. What made that difference?
Context is more important than the intraday VWAP framework. in terms of what's this market up to? Where might we go, right? The fact that VWAP matters is true. You will see other sessions where there's a lot of rejections directly from VWAP and whatnot. Guess what? This was not one of those sessions. We were above and below VWAP many times leading into this. So that weakens the importance of it. If you see VWAP respected a few times, that's a heads up, right? That it's important, that it matters, that one side of the tape is kind of controlling. Maybe there's some algos out there who are running a VWAP entry program for that session, those kind of things. We can listen to those details. But VWAP, my edge comes from the edges, right? We keep saying that phrase that I say. I see this VWAP framework just the same way that I see a profile. To me, here's the upper and lower edges of it. This middle area from the +1 to the -1 is the distribution. So you don't hear me talking a lot about what the VWAP is, which is point of control. I don't focus very much on point of control. I look at the edges of the distributions, no matter if it's VWAP-based edges, actual literal market or volume profile-based edges. Those are what I'm most interested in.
So it's like the value area.
It is.
The bands
Absolutely.
Yeah.
Absolutely. In the middle of the value area is the least good place. I don't even know how to phrase it right now. It's the least attractive place to do business, in my opinion. There's more chop versus from the edges, you get these cleaner wicks I can get involved in and have tighter stops, have a better chance of them working if they're going to work.
Yeah,
Less
so
noise.
I know you touched on this, but I want to kind of just ask the question anyway. When the chat's like, hey, why don't you go short now? You're at the second upper standard deviation band on your VWAP, but you knew not to. And look what happened. We had a breakout, right? This thing kept going. It just broke out to the upside. That would have been a bad idea, right?
That's right. I won't say that I had a crystal ball that that's what was going to happen, but I do know that if we were to go to even the bigger picture, such as this weekly, if for the week we're not going to be able to kind of hold an imbalance down and we're going to start rejecting VWAP from above and things like that, on this time frame, where are we trying to get to? Let's call it 1900. Excuse me, 19800. That's where we're trying to get to test that inflection. If you go listen to my pre-market talk this morning before we even started trading, I was saying that I am bullish for an overall mean reversion play short term within a very bearish overall big picture landscape. So this weekly here tells me that exactly we are below last week's value. So that's a bearish inflection when we get up there. But in the meantime, if we're going to start holding distributions from the prior day, breaking out of prior day distributions and holding those, I think we're in mean reversion mode to get to some of those higher targets. So that's why, other than that one stop run scalp short, I was long only today, is because I'm leaning off the lower edge of that distribution within my bigger contextual view of a mean reversion move up to things like last week's value and whatnot.
Okay, and then if that happens, right, then all of a sudden, potentially another short comes on your radar screen, given where the distribution is now.
Now we start the whole process over again. Okay, we're at a bearish inflection. Can we start to hold below an LVN from yesterday once we get there, right? That yesterday, right? Not today's yesterday. We get up there. Oh, look, we failed out of the upper end of yesterday's value. Now we're back in it and holding. That's resistance. Order flows bearish. Intraday VWAP is offering a trade location of fading an upper extreme or going with an imbalance downwards. Put all of it together. That's the process, man. This is NADRO, what we're describing here. Narrative is the N. A is for acceptance. Where are we relative to those narrative references and what's going on? D is for that DVA, developing value area intraday we use to help us identify intraday trade locations. R is the rhythm, the ebb and flow, the zig and the zag movement of intraday rotations. And O is the order flow. We try to put all those things together for a really good trade.
I love that. So the focus obviously is on regular trading hours, right? And not before the bell rings?
No, I really am. Other than obviously some of the profiling, I prefer to keep pit session only. I'm very much aware of what happened in the overnight session. Where did we go? Like I was alluding to on the stream. Guys, the overnight high is not important because it's the overnight high. The overnight high or the overnight low, both of which in today's session, was important because it was a point at which the market failed to sustain anything outside of yesterday's upper distribution. That's why they're important. And so I'm very much aware of where the market has tested, where it's failed from the overnight session as I begin my prep work and getting ready to trade. I don't wait for the pit open to trade if there's a trade. If it's an hour and a half before, I'm very routinely trading an hour and a half before the pit session opens.
But big news releases happen an hour ahead of time, right? So I'm glued to those, right? I want to see what the price action is going to be based on the market reaction, whatever the result is, right? I'm not smart enough to know if it's a good result or bad result, but the market
Most people aren't. Yep.
That's all you need, right?
Yep. For me, they're news releases. I see them as minor annoyances that I have to keep up with them. I have to, again, not knowing what they are, just that they exist, and that I have to sometimes come out of positions when I don't think it's appropriate to hold risk into them. Sometimes I'm stalking a trade. I can't get into it because the news is coming, and then boom, it leaves the perfect opportunity. So I have a very love-hate, more on the hate side relationship with the news releases.
I gotcha. Okay. Well, that's awesome, man. Thanks for spending so much time with us. It was a long morning for you, man.
Another day in the life. Always happy to talk with you, Jim.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.